Hi friends. Welcome to my channel. Ever been curious about making money with stocks and bonds? Well, you're in the perfect spot. Today, we're diving into how investing in stocks and bonds can be a game changer for your income. It might sound tricky or a bit risky to some, but I'm here to guide you through it safely and effectively. Whether you're just starting out or you've been around the block with investments, this video is your go-to guide. We'll break down the essentials and show you how to really reap the benefits of your investments. Gear up for a thrilling financial adventure. Let's roll. Let's start with the basics. Stocks are essentially pieces of a company's ownership. When you buy stocks, you're getting a slice of that company. This means that if the company does well, you can cash in on part of their profits through dividends and the increased value of your stocks. Bonds, on the other hand, are like loans to companies or governments. When you buy a bond, you're lending them cash. In return, they promise to pay you interest at set intervals and give back the loan amount when the bond matures. The main difference between stocks and bonds is in the risk and potential reward. Stocks are generally riskier since their value can fluctuate a lot, but they also offer a higher potential for profit. Bonds are considered safer, providing a fixed income, but usually with lower returns than stocks. Choosing between investing in stocks or bonds really boils down to how you feel about risk and what your financial goals are. In the next sections, we'll dive deeper into how you can make money from each of these investment tools. Now that we've got the basics down, let's dive deeper into the world of stocks and discover how to make money from them. The first way to earn from stocks is through dividends. Dividends are payments made to shareholders out of the company's profits. Not all companies pay dividends, but many stable ones do. The second way is through the growth in the value of the stocks. If a company's stocks increase in price, you can sell them for more than you bought them for, thus making a profit. Choosing the right stocks is key to success. One way to do this is through fundamental analysis. This involves examining a company's financial indicators, its management, market prospects, and competitors. It's also important to conduct industry analysis. Some sectors grow faster than others, and investing in the leaders of these sectors can yield good returns. But don't forget about the risks. Stock prices can fluctuate wildly due to various factors, including economic changes, corporate news, or even political instability. Investing in stocks requires careful analysis and understanding of the market, but it can be very profitable. In the next section, we'll look at how to make money from bonds. Let's now talk about how you can make money from bonds. Bonds might seem less glamorous than stocks, but they play a crucial role in a balanced investment portfolio. Investing in bonds offers a fixed income. This means you regularly receive interest payments based on the bond's face value. At the end of the bond's term, you get back its full nominal value. There are two main types of bonds, government and corporate. Government bonds are generally considered safer since they're backed by government guarantees. They're ideal for conservative investors looking for stable income with low risk. Corporate bonds usually offer higher returns but come with greater risk, as their payout depends on the financial health of the company. They're a good choice for those willing to take on extra risk for higher gains. The primary risks with bonds involve changes in interest rates and credit risk. If interest rates rise, bond values fall. And if the company or government issuing the bond faces financial difficulties, it could lead to reduced payments or even a halt in payments. Investing in bonds requires an understanding of the market and risk assessment, but it can provide a stable and predictable income. This makes bonds an essential element of any diversified portfolio. Now that we've explored how to make money from stocks and bonds, let's discuss how these investment tools can interact in your portfolio. Stocks and bonds serve different functions in your portfolio. Stocks offer the potential for higher returns, but with a higher level of risk. On the other hand, bonds provide more stable and predictable income, but with less growth potential. The ideal mix of stocks and bonds depends on your individual situation, your investment goals, and your attitude towards risk. For instance, younger investors might lean towards a higher proportion of stocks for capital growth, while older investors might prefer bonds for stable income and capital preservation. The key to successful investing is finding the right balance between risk and profitability. High-risk stocks can lead to greater profits but also significant losses. Bonds reduce the overall risk of your portfolio and provide some stability amid market fluctuations. Integrating stocks and bonds into your portfolio will help you achieve a balance between growth and protecting your capital. Remember to periodically review and adjust your portfolio to match your current investment goals and circumstances. So, you've got the basics of investing in stocks and bonds. Now, let's talk about how to start investing in practice and what tips can help you with this. The first step is to open a brokerage account. You can do this through a bank or specialized investment platforms. Choose a platform that offers a user-friendly interface, low commissions, and a good selection of investment tools. There are also online platforms for investing that provide convenient tools for managing investments independently, as well as robo-advisors for automated investing. Diversification is one of the key aspects of successful investing. This means you shouldn't put all your funds into a single stock or bond. Spreading your investments across different assets and sectors can help reduce risk and increase income potential. It's also important to understand that markets are subject to cycles. There are periods of growth and decline. Don't panic during short-term fluctuations, and maintain a strategic approach to investing. Patience is the key to success in investments. Long-term investments usually yield better results than trying to catch the wave and make quick money. Starting with these fundamentals, you'll be able to build a strong foundation for your investment portfolio and, over time, become a more confident and experienced investor. And that brings us to the end of our journey through the world of investing in stocks and bonds. We've learned what stocks and bonds are, how to make money from them, and how they can work together in your investment portfolio. Now is the perfect time to start taking action. Open your first brokerage account, make your initial investments, and remember to keep learning and studying the market. Remember, investing is a marathon, not a sprint, and success comes with experience and patience. Thank you for joining me today. I hope this video was helpful and informative for you. Don't forget to subscribe to the channel, like this video, and share it with your friends. See you in the next videos, and remember, your financial well-being is in your hands. Goodbye, and happy investing.